All right, folks, here we are on Trading Up. We've got Casey Stubbs in the house now. Casey's done an amazing podcast. Go and check it out. There's a link underneath the video here and all the links to Casey's stuff as well. Now, today you're going to find out how he's actually doing a little experiment showing you how to double an account within 3 days. So, Casey, do you want to share your screen and we can have a look at things?
Yes, sir.
Folks, if you missed out on joining the Trading Nut Funded Cup, don't worry. With over 3,000 traders registered, my sponsors, City Traders Imperium, have decided to run another. But this time, they've promised the prizes will be even bigger and better. Folks, if you want to register for this and show your skills as a trader, click on the link above or the link below the video or in the podcast description. Then sign up for free before mid-July 2022 and get 10% off any City Traders Imperium product just for entering the competition. Good luck, folks, and we'll see you in the cup.
So the first thing that is really important when you're working at growing a small account, it's important to grow a small account because if you don't double it quickly or at least increase it at a rapid pace, it's going to take forever to take a very small $300 account and get it to where it's anything that's going to be more than a few pennies or a few dollars. So you have to do it quickly. So that's the first thing. The next thing is you have to focus on money management. You have to be intentional. And just because that you're trying to grow quickly and double doesn't mean that you can be careless or reckless. So I right now have a balance. If you let's see if I can, you can see right here, it's $337. And my current equity is 712. So I've actually doubled it as of 3 days. I started this, if you look at the entry on the first trade, it was the 19th of May. So I've already accomplished my goal of doubling the account. Now, the important thing, I'm not even going to talk about the trade entry right now, but the important thing is your risk management plan. I'm risking 10%. I risked 10% to make 100%. So a lot of educators will say, don't risk 10%, risk 1% or 0.5% or whatever. I'm saying I'm risking 10%. And if I can make 100%, well, that's a good risk to reward. And this trade is not over yet. And it could end up being a triple or maybe even a quadruple. And so if I lose, if I end up tripling this and then I lose on the next one, I do it again and I lose 10%. Well, I can lose a lot of 10% trades to do it. And then as I'm losing my 10%, I'm decreasing if I hit a losing streak. But really, as you'll see, you just got to catch a trend, right? That's all you got to do is catch a trend. And then you use the power of leverage in your favor. So now that we talk about that, the first trade on this list is up $165. I risked one mini lot, 0.10, okay? And I risked about 30 pips on it, which is about $30, right? So that's 10%. And once I got into profit, so I'm on a weekly chart here, and if I'm not going to go over the strategy too much, but remember, I'm trying to line up time frames. This was a very strong weekly candle, and I do normally like to do monthly, but if it's a weekly and a daily, that will still work to me, especially if I think that it's at a good support level, which this was. If we look at a longer time frame here, we had a nice solid support and we had a nice weekly candle. So if we look at the chart and we zoom up, you see there was the high of last week, the previous high there. My initial entry was on the break of that high. So I broke down lower, and then this was a bullish engulfing candle, and that was my entry on a weekly. Okay, so that was my initial entry. So now, once I got into profit, now I just jumped down to an hourly time frame. There is my first entry at 124, 124.16. And then once I was in profit, about 70 pips, and then I waited for the market to stall a little bit, and then I got in again right there. Okay. Now, the situation that we're in is that I took a larger size on a small account, so I didn't have enough margin. Because if you'll notice down here, it says free margin is only $85. Well, to take a trade with 10 micros or 1 mini, it's 124.97 is what that costs in margin. So I didn't have enough margin to take a new trade until I got up to here. And then I had enough margin to add to it. If you'll notice right now, my free margin is $86. I could not add to this position if I wanted to because I'm maxed out on margin. Now, what's interesting, another thing that's interesting about this is I'm using this margin as my advantage. As the trade goes up, my free margin grows. And if it keeps going, I'm just going to add, if this gets up to 124 free margin, I'm going to add again. And I'm just going to keep doing that until this trend disappears. And here's the really cool part is I have no risk right now because you see how I have 85 of margin? If this thing decides to tank on me, it will close before I even get to my stop loss because I will lose free margin and my margin will margin call while I still have positive equity. And so right now, even though my stop loss are way down here, I have a built-in stop loss, which is my margin call. So as long as the trade continues, as soon as I get more margin, I'm adding a trade right away. And so right now I'm up 376. I've already doubled it. I was looking at the chart. I think we could get up to the last week's high, maybe to this 10 moving average. If I look at maybe a Fibonacci or something, I could probably get up a little more. When you stack trades like this, and then I'll stop talking, but when you stack trades like this, as long as it keeps going, your momentum, you start making more and more and more money. And so right now I'm making $50 or not 50, $5 a pip. But as I continue to stack, the momentum gets higher and higher. And if we get a nice run, I could maybe even 10x on one trade.
And so was there at any point like a chance that you would have blown this account using this approach?
No, because I'm only risking $30.
Right. So risking $30 on this, you've managed to double it. So each additional, sorry, just to get my head around it, each additional stack is also risking $30. So the stop loss was higher for each of those, or how they worked?
Not really, because so the second stack is probably the trickiest one. So when I added here, if it went all the way down, I would have lost. I would have moved my stop to about break even. So the first trade would have been break even, and then this was 70 pips. So this would have been a $70 loser, and my first trade was break even, so that would have been a $70. So the first stack is the riskiest, because if it goes all the way back to break even and you stop out, you're done. And you take a bigger, so that was actually even bigger than the 10%. But now if I add a new lot, I'm not actually adding any additional risk to my account at all, because I'm keeping my margin so tight. As soon as I get a pullback, it's just going to margin me out.
And so I'm just trying to get my head around it. So if you get a pullback on, say, the one that's at current profit 60 cents, if you get a pullback, it will stop you out at $125 down, or how does that work? I can't even get my head around it.
I don't know the exact level per se, but what happens is when my margin starts to get negative, this bar gets red. Okay. And so right now, for every pip I'm losing, my free margin disappears pretty quick. So if it drops, if this drops down to a little bit here, I get it. Maybe these top two will be losers, but then I'll still make money on these bottom three.
Yeah, I think, okay, all right. So it'll cut the top ones, which will be losers. So you'll lose some money, but because you're in profit, that's where the benefit comes, because you've already got equity there that you can bank. So, okay, right. That makes sense. Right. Okay. Cool. And so all right. So you're you're carrying this on for a little bit longer to that level or one of those levels. I'll be interested to see how things pan out. Maybe we can do, because this will be a while before this goes live, maybe we'll do a little, you can do an update video on what actually happened, and we'll tack this on to the end.
Yeah, we could sure do that. And, I would be totally content in just closing this right now. And so that is sometimes is the issue when you're trying to grow a small account. You're like, ooh, should I take it or should I push it? And I already told you in the interview, what am I going to do? I'm a high risk guy. I'm going to push it. So I don't.
And how many other I suppose opportunities like this we're around or are around on a regular basis?
I think there's probably multiple good trades like this every week. I mean, the key is my first trade is up 200, there's 163 pips. And so you need to find, if you want to do this, it's good to use higher time frames and just try to find a leg, and then if you're good at swing trading and you can trade something from level to level, just identify that level and then just keep stacking until you get there.
And I suppose if you lose the first trade, then you've only lost 10% of the account, and you can try and find another leg somewhere else and have another crack at it.
Right. And if I close this one out, I've doubled. And so next time I'm going to be starting from a higher position. And so I'll be able to start with probably 0.2 would be the starting position. And then you just keep doing that. And it's a really great way to grow your account quickly.
And can you quickly talk us through how you're using the MACD and RSI indicators there?
So when I'm doing this, I use the long-term analysis, but then I like to find the MACD pullback for an entry. So like for this one right here, we got the pullback, and then I drew a little box here. And so I waited for it to pop out. I got in a little bit early, but I'm just looking for shorter term. Both of them are, the RSI and the MACD are the same thing. They're just to identify pullbacks in a trend.
Okay, cool. Awesome. Well, look, that's absolutely fantastic. Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. Thank you for sharing that with us today, Casey. I look forward to seeing what happens next on that trade. So maybe we'll tack it on right now, or we'll just go straight into a ending. Right, so to wrap up, do you want to let the guys know how they can get hold of you?
On my website, tradingstrategyguides.com. You can read all of our articles, sign up for some of our free guides that we offer. We got free price action cheat sheet and other things. And also listen to my podcast, How to Trade It. And then from that same website, tradingstrategyguides.com, you can get access to my YouTube channel.
Brilliant. Well, look, guys, there is a link below the video to that and the podcast we shot before this to hear Casey's full story. Please go and check it out. Look, thank you for watching. Do remember, hit subscribe while you're there, hit like, click on that notifications bell, click all, and we'll see you in the next video.